Hi, everybody, and thank you for joining us for a Gibson Capital webinar where we are excited to continually bring valuable educational content to our investors. My name is Chris Gibson, and I am joined by my brother Kurt Gibson. And today we will be reviewing step by step the investment process from the perspective of a new investor so that you can feel fully comfortable knowing what to expect before investing in your first deal. Looking at the agenda today, pretty straightforward. We're going to get into what is the process to get invested in a deal. And we'll review any questions that you might have at the end. So quick background on who we are at Gibson Capital. Again, my name is Chris Gibson. I've been long-term investing since 2011, primarily in equities. I currently operate an investment management company that I started in the year 2020. And I began my real estate syndication investment journey in the beginning of 2022. My brother Kurt, his interest in real estate began in 2016 when he bought his very first property. He now owns 9 single-family condos, townhomes, and properties and that he self-manages. And he began his real estate syndication journey in the beginning part of 2022 as well. All right, a quick review of what we do here at Gibson Capital. Our mission statement is to help busy professionals obtain financial freedom through passive real estate investment opportunities. The 4 primary asset classes that we primarily focus on are multifamily, think apartment buildings, short-term rentals, you've got your Airbnbs and Verbos, self-storage facilities, and finally mobile home communities and RV campgrounds. These 4 asset classes for us are the most recession resilient, inflation proof asset classes in real estate, which is the reason why we stick solely to these. All right, jumping into the primary content today. So how does it work? In front of you, you see the 7 steps of investing in your first deal, the overall investment process. Number 1, we, Gibson Capital, identify a top-tier investment opportunity and share it with our investor club. Number 2, you evaluate the sponsor, the market, and the deal to see if it's a good fit for you. Number 3, you submit a soft commitment to the deal with the amount that you would like to invest. Number 4, you're going to sign up or log in to the investor portal. Number 5, within the portal, you're going to sign your subscription documents. Number 6, you are also going to fund your investment via a wire transfer. And lastly, you are going to receive distributions and project updates. Now we're going to dive into each of these 7 points a little bit more in detail together. Number 1, we find the deal. So at Gibson Capital, what we are going to do as our part is we are going to, number 1, we're going to identify the market, the sponsors, or the operating team, and the deal itself, the property. We are also going to underwrite or analyze the deal to ensure it's financially suitable for investing. We are also going to write the business plan on how we plan to add value and approach the property. We are also going to go under contract on this property. We are then going to find and source all the equity needed to fund the given deal. We are going to arrange remaining financing necessary to close on this deal. And then lastly, once we own the property, it's under our control, we are going to manage the asset. Number 2, you are going to evaluate the deal. So the most important thing that you are going to need to do is evaluate the deal to see if it's a good fit for you. We at Gibson Capital are pre-vetting deals, but each investor has different goals, so it's ultimately up to you to decide if it's a good fit for you. So in reviewing each deal, you're typically going to initially receive an email from Gibson Capital that outlines all of the deal highlights. Within this email, you will also find an investment summary deck along with a webinar that dives further into the financials of the deal and the fundamental aspects of the property or the deal itself as well. Now, when you evaluate a given deal, and to see if it's a right fit for you, the top 3 things that you're going to want to look at, that we at Gibson Capital look at, is number one, the business plan, number two, the market and the location, and number three, the sponsor team. To hear more about how to more thoroughly analyze a given deal, you can check out our new investor webinar on our Gibson Capital YouTube channel. Number three, you're going to finally submit your soft commitment. So once you've decided that this may be a deal that you might be interested in investing in, get your soft commitment returned to us. Doing this reserves your spot, but it does not legally nor financially commit you to the deal at all yet. This is a good idea if you're thinking there's even the slightest chance you might be interested at all in doing the deal, because spots fill up very quickly typically. Number four, sign up for the investor portal. So this is where all future correspondence is going to occur and be delivered to you. Things like your initial subscription documents, which we're going to outline in the next slide. This is also where you're going to set up your ACH or bank information to wire your initial contribution out and also to receive future distributions. This is where you're likely going to also see a dashboard showing your returns over the course of the deal. And lastly, you'll see a document center, typically showing all project updates and notices from the sponsor team. Number five, sign your subscription documents. So real estate syndication involves pooling funds from multiple investors to invest in a given real estate project. The specific documents required for subscribing to a real estate syndication can vary depending on the structure and jurisdiction, but here are typically the most common documents that you will see and need to sign before investing in a given deal. Number one, the PPM. This stands for a private placement memorandum. This document outlines the details of the investment opportunity, including the investment strategy, risks, financial projections, and terms and conditions. It provides potential investors with all the necessary information to make an informed decision. Number two, the operating agreement, also known sometimes as the limited partnership agreement. This agreement defines the legal structure and terms of the syndication. It outlines the rights, responsibilities, and profit-sharing arrangements between the syndicator, or the party organizing the syndication deal, and the investors. Number three, a subscription agreement. This document is signed by each individual investor and serves as their formal commitment to invest in the syndication. It includes details about the investment amount, payment terms, and representations and warranties made by the investor. Number four, the investor questionnaire. This form collects information about the investor's financial status, investment experience, and risk tolerance. It helps ensure that the investor meets any applicable regulatory requirements and primarily identifies whether they qualify as either a sophisticated or an accredited investor. So, as you can see, real estate syndications can comprise of complex legal and financial documents. So we advise you to consult with any legal and financial professionals as needed when considering investing in any deals. Number six, fund your investment. So within the investor portal, you're also going to be setting up your bank account information that you're going to be using to send your secure wire transfer to fund your investment. Wiring instructions are securely provided within the portal. They're typically found either in a specific wiring instructions document or on a page within your subscription documents. Lastly, number seven, receive distributions. So in the investor portal, while subscribing to a given deal, one important step that you're going to perform is to link your bank account information in order to receive your cash distributions via ACH directly into your bank account throughout the life cycle of the deal. You will typically begin receiving monthly or quarterly distributions into your account shortly after the deal closes, typically 1 or 2 months. And at the end of each tax year, our accounting team will prepare and provide you with your year-end K-1 tax statement. A quick tip for you is plan on filing an extension whenever you're investing in real estate syndications. The reason being is that CPAs do need time to organize and unbundle all the legal entities and properly allocate depreciation and losses and profits for each individual investor. All right. Any questions? So we have a question regarding retirement funds and investing in a deal. One quick tip on investing in these deals using retirement funds. If you do plan to use any retirement funds to invest in a deal, we want you to engage our self-directed IRA partner ideally at least 3 weeks before the deal funding is due. The reason being is that usually to create a self-directed account, uh, you have to create an LLC, and you also have to then fund the account, and then you have to have enough time to actually fund the deal itself. So there's some logistical steps to it that typically takes about 3 to 4 weeks. It can happen sooner, but typically don't bank on that. All right. So I think that's all the questions we have, but if you have any other questions regarding the content of this webinar, please reach out to myself, Chris Gibson, or my brother Kurt at the emails provided here. Again, we thank you so much for tuning into this webinar on the investment process, and we look forward to partnering with you soon.